Hey folks, Doc Severson here for the Theo Night Report for Tuesday, November 22nd. You know, everywhere I look around me, I see people basically gnashing their teeth saying that they can't believe that this market is going higher. Well, one more time, it looks like the majority got this wrong. I mean, actually, this is a guy I used to work with once upon a time, Mark Cuban, and even Mark Cuban got this one dramatically wrong. Cuban calls Trump the worst possible thing for the market. Okay. Do you still believe that the case would be that the stock market would see mayhem? Okay. And he's like, it would definitely fall. And I think this is what happened this was the majority opinion. Not only that Hillary Rodham Clinton was going to win 2 weeks ago, but that if Trump were to get in somehow, that markets would completely tank. Well, when everybody sees the same thing, everybody is going to be wrong. And we have seen this so many times recently in the market. I mean, just looking at the S&P here, back in June, everybody knew that Britain was going to vote down the Brexit, was going to stay in the EU. So what happened? Well, everybody got scared for a second and then thought about it for a minute and said, well, maybe this is a good thing. And then the same thing happened, especially in the overnight futures. Actually, let's go over to the ES instead of the SPX here, because it shows it much more dramatically. You can see the Trump sell-off here, which lasted all of about 2 or 3 hours until we saw the market bottom out, and we've seen nothing since that point. I mean, look at this. We're going from 2030 all the way up to 2200 in the space of 2 weeks. And so now everything I hear from people is saying, hey, the market's overbought, this can't continue, this has got to slow down. Well, I got news for you. I mean, this goes back to what we've been saying since the beginning of this year, right? Let's go on the ES or the S&P 500, doesn't matter which instrument that we use. This is what we've been watching. So we do everything from a top-down perspective. We said, hey, look, markets can correct through either price, and this is the fastest way to do it, right? You just correct through price, or it can correct through time. And this is the slowest way to do it. And we went through a year and a half, about 2 years of this, until markets finally broke out after the Brexit vote, right? So it was about, it went from about October of 2014 all the way in through July of 2016. So almost 2 straight years of going up and down, up and down, up and down. And in the meanwhile, what this does is builds up a tremendous amount of energy. Markets go from periods of range expansion to range contraction. And this is what we've seen over the last couple of years. And now, clearly, what the market is showing right now, it's going into the next range expansion phase with a full fuel tank. Now, this indicator down here does not necessarily show any kind of directionality to it. All it says is that you've got an enormous move coming. And we saw this back at the beginning of 2000, and we did get an enormous move out of this. It was a full bear market came from there. The last time that we saw this after that was about in 2004, when we had all of this sideways price action, and it preceded a huge bull market to the upside. All right, the next time that we saw something like this occur was at the very top of the markets over here back in 2007, and that preceded a very large move to the downside. Then we got into the same kind of move back here in 2011 as the markets went completely sideways. Actually, this was later on in 2010, and we saw the results of that from here. So now here we are again, and this is what I've been banging on the table about for the last several months, is we can't forget the larger time frames. We tend to all get focused in on the daily movements of the charts day by day by day, and we forget that there's larger patterns in place, not only the monthly, but also the weekly. Now, the weekly chart has been showing the same kind of pattern since the beginning of the year. We have some kind of bad news comes along, stokes up the negativity of the market, and then we see an epic rebound, which is actually faster than the move that got it there in the first place. Same thing here. Negativity gets stoked up, and then it gets unwound to the upside. Negativity gets stoked up, it gets unwound to the upside. We're seeing the same exact pattern. Until this changes, the market will continue doing this sort of thing. So I'm not surprised to see the market going as hard and as high as it is right now. I'm a little surprised to see no reaction whatsoever at 2,200. But again, the market does not exist to please us, nor does it exist to follow some rules that some little line on a chart says. Okay, it can do whatever it wants to do. All it's showing is essentially how much available energy is available in any given time. And right now, when you have a supply-demand imbalance, as we're seeing on the small caps are probably the biggest recipient of this. I mean, this is an enormous supply-demand imbalance right now. So not only were too many people too short, too negative on the Russell, because the Russell was getting hammered up until about 2 weeks ago, right? So too many short positions, too late in the pattern, right? Those got unwound, but now the bulls have taken over the baton. A lot of times we'll see short covering and then it dies as it goes into all-time highs. Not so. Right now, fund managers are going crazy picking up small caps at all-time high prices. So what do you do with this market if you're not fully invested right now, or if you're saying, all right, where's this going to go from here? Well, I think two things from this. First of all, I don't see this just because the market is high doesn't necessarily mean anything. I mean, we've seen this with stocks for the past year, is that we've got stocks like NVIDIA out there, which just continue punishing the bears to the upside. Just because something's high doesn't mean it necessarily has to reverse and go down from there. There could be something fundamentally about what NVIDIA is doing. Perhaps it's their autonomous driving technology, all right, that's causing a huge supply-demand imbalance. So for stocks like that, let's not get in front of them. Let's not short something just because we don't think it deserves to be at up a certain level. Supply, demand, imbalance, and price is everything in this market, right? There's 90% of the time that we can use technicals to be able to help us by using past price data and past price patterns to be able to forward project how something's going to act in the past. Well, that's similar to being a parent of a teenager. Is 90% of the time you're going to know how your teenager is going to act. And there's going to be sometimes, though, where they just do things that you just don't understand. And this is going to be an example of one of them, is that we have a supply-demand imbalance right now. It's not going to be able to be picked up on any specific chart, especially at the daily chart level. But when we pull back and use different time frames here, this is where it does start to make sense, because this huge pattern here that we saw on the S&P 500, there's no debating that this is building up an enormous amount of potential energy on. Markets go from range expansion or trends to range contraction until they earn the right to trend again. Guess what it's doing right now? So back to my question, what do you do with something like this right now? Especially if you missed the move. I mean, everybody missed the move. Everybody missed the Brexit move. Everybody missed this move. Nobody saw this coming. Okay, so don't worry about it. Don't try to chase after something like this. So what a lot of people are doing are saying, well, this is going to fail. This is going to come straight down here like this. No, that's not going to happen. That is not going to happen. Those people have been saying the same thing for the last 7 to 8 years, and we've been seeing there's too much liquidity into the system right now. And there's too many things changing in a fundamentally positive way right now for that to just reverse. Will there be volatility in the near term, especially in the next 6 months, as this administration tries to get their footing and tries to do the right things? Of course there will be. Of course there's going to be mistakes made. But the market's not going to tank just because somebody gets offended. That is not going to happen. What I think we will get into is a stair-stepping market, very similar. I could see very similar market here to 2013, where we rally to exhaustion, then pull back and consolidate in a very slow manner, rally up to exhaustion, and we stair-step. We stair-step, and we stair-step. So this is going to be the market character very likely going forward, which is going to be very low implied volatility, right? It can be very low implied volatility. This is why we need to be looking at things like time spreads if we want to be able to sell premium. Yes, if there is ever a time to buy call options, we may get an opportunity to do so, to actually just buy call options. And it may not be that difficult of a move because they're not going to be priced all that expensively. But that's not going to be the bulk of our trades. The bulk of our trades are still going to be spreads that are much, much easier to manage and risk manage to that. So buying these types of trades, or selling in some cases, these types of trades are going to be pretty much our bread and butter as we get into a stair-stepping environment. I think this is what we can look forward to for probably the next year, and look to take advantage in a big way of any serious pullbacks that we see along the way. The serious pullbacks, I think, are going to be furiously bought, because this is not a cheap market anymore, and it's going to be more and more difficult to get value out of a long asset. So two things. Again, stair-stepping, number one, and taking advantage of deep dips on bad news, which are going to be bought. So that's it for today's report. That's it for me for this week. Have yourselves a great Thanksgiving, and I'll see you next week. So look for Don's report tomorrow. Take care, folks.